What are some of the best US stocks for dividend growth? In order to balance out an income portfolio, it's a good idea to invest in high-yielding cash preservers today, but also invest in companies with solid dividend growth, so that a smaller payout today becomes an immense source of income for us in the future. Dividend growth is a good sign for investors, as it suggests that the company is in a strong financial position and is confident in its ability to continue to pay dividends in the future. This video explores 10 US stocks that have a record of achieving over 10% annualized dividend growth over the past 10 years. This is the average over that time period. Some years may be higher, while others lower. I have looked at US listed companies and analyzed their dividend growth from 2013 to 2023 to come up with a list of great additions to any income portfolio. If you're new here, then welcome to Wise Wealth, where we dive into all things personal finance. If you like this type of content, make sure to give it a like down below and consider subscribing for more personal finance and investing content. Without further ado, let's get into it. First on the list is Morgan Stanley, ticker symbol MS. Morgan Stanley has an astonishing 10-year dividend growth rate of 31.21% annually. Looking back to 2013, an annual dividend payment represented a total payout of 20 cents per share. Fast forward to 2023, and the trailing 12-month annual dividend is an incredible $3.04 per share. To show the power of this, let's see what the current annual dividend represents compared to the price a shareholder would have paid for Morgan Stanley back in 2013. This is also known as the yield on cost. At the beginning of 2013, Morgan Stanley was trading at around $20 per share. This means that the yield on cost in 2023 is equal to 15.2%. This is exactly why the compounding return of dividend growth stocks has awarded many investors financial freedom. For comparative purposes, we will also look at the yield on cost for every stock on this list. All prices given are reflective of any stock splits that have taken place since the beginning of 2013. A large majority of dividend growth is down to the company's decision to double the quarterly dividend in 2021, and this shows Morgan Stanley's commitment to reward shareholders in the form of capital return. The company has a current dividend yield of 3.53% and pays out dividends quarterly, typically in February, May, August, and November. Number 2 on the list is Tyson Foods, ticker symbol TSN. With a 10-year dividend growth rate of 26.44%, Tyson Foods is another strong candidate for an income portfolio. What was an annual dividend of 22.5 cents per share back in 2013 has now grown to $1.90 per share. At the beginning of 2013, Tyson Foods was trading at around $20 per share. Given the current dividend payout, this represents a 9.5% yield on cost. Growth has slowed in recent years as the company has matured, but this shows that management is prudent and is prioritizing dividend safety. Tyson Foods also yields a healthy 3.17% and pays out dividends quarterly, typically in March, June, September, and December. Next, we have Jefferies Financial Group, ticker symbol JEF. Over the past 10 years, Jefferies has achieved an annualized dividend growth rate of 17.9%, with most of the growth coming in recent years. The company didn't raise its dividend up until 2017, but since then, the annual dividend payment has risen from 47 cents per share in 2013 to $1.20 per share in 2023. At the beginning of 2013, Jefferies was trading at around $21 per share. Given the latest trailing 12-month dividend, this represents a 5.71% yield on cost. The yield is higher than the previous two, sitting at 3.65%, and is paid out quarterly in February, May, August, and November. Number 4 on our list is Broadcom, ticker symbol AVGO. With an astonishing 10-year annual growth rate of 38.5%, investors in Broadcom have been immensely rewarded in the form of dividends over the past 10 years. What was an annual payout of 88 cents per share in 2013 has now become an incredible $17.40 per share in 2023. This highlights the power of investing for dividend growth. What is more impressive with Broadcom is the yield on cost. Given the current annual payout and that Broadcom was trading at approximately $32.50 per share at the beginning of 2013, this represents a monumental 53.54% yield on cost. Broadcom also carries a respectable yield of 2.71% while paying out dividends quarterly in March, June, September, and December. While these stocks provide solid dividend growth over time, it's also prudent to seek a return on our cash portion of our portfolio, and today's sponsor, Interactive Brokers, provides one of the most attractive prospects on the market. With up to 4.33% interest received on uninvested cash, we can receive dividend-like returns from our cash allocation as well, further boosting portfolio returns. And with low-cost access to over 150 markets, fractional trading, and intuitive interfaces in desktop, web browser, and mobile app formats, investing has never been so accessible. To find out more or to set up an account, click on the links in the description below. Signing up to an account through them will also help support the channel. Anyways, back to the video. At number 5, we have Microsoft, ticker symbol MSFT. While many wouldn't expect to invest in Microsoft for income purposes, the company has achieved a 10-year compound annual dividend growth rate of 11.7%. While it's lower on the list than some examples, investors have seen this counterbalanced by the extraordinary growth that the stock has achieved, soaring over 10 times in price from 2013. But investors have also seen strong dividend growth. By investing in 2013, an annual dividend payout would have amounted to 97 cents per share. If you would have held the stock until today, you would receive an annual dividend of $2.66 per share. Given that Microsoft has seen tremendous growth since 2013, investors have realized a phenomenal yield on cost for the stock. With an approximate price of $27 per share at the beginning of 2013, this represents a 9.85% yield on cost. The stock has a current dividend yield of 0.94% and pays out quarterly in March, June, September, and December. Number 6 on the list is Lowe's Corporation, ticker symbol LOW. Lowe's has been a steady performer and popular income source for many investors over the years, and is focused on returning capital to shareholders in the form of dividends. As a result, the stock has achieved a 10-year compound annual dividend growth rate of 20.34%. To put this immense dividend growth over 10 years into perspective, a shareholder in 2013 would have received an annual dividend of 68 cents per share. Holding until today would have resulted in a 12-month trailing dividend of $4.20 per share. Given that Lowe's was trading at around $36 per share at the beginning of 2013, this represents an 11.67% yield on cost. Lowe's has a current dividend yield of 1.98% and pays out dividends quarterly, typically in January, April, July, and October. Next, we have Visa, ticker symbol V. Over the past 10 years, Visa has achieved an annualized dividend growth rate of 19.62%. What was an annual payout in 2013 of $1.39 per share has now grown to $1.65 per share. This is an outlier, as 2013 saw a massive rise in the dividend payout before rebasing to a lower level in 2015. This does, however, provide a solid yield on cost. At the beginning of 2013, Visa was trading at approximately $39 per share, which represents a 4.23% yield on cost. And with a current dividend yield of 0.73%, it's relatively high in comparison. Visa pays out dividends quarterly in March, June, September, and December. Number 8 on our list is Sherwin-Williams, ticker symbol SHW. Sherwin-Williams is one of the strongest dividend income candidates on this list. Not only has the company achieved a 10-year compound annual dividend growth rate of 15.76%, but the stock also has an astounding record of 44 years of consecutive dividend growth. Looking back to 2013, what was an annual payout of $2 per share has now risen to $2.40 in 2023. Given that the stock has increased some 325% since the beginning of 2013, this also highlights the power of dividend growth and the prospects for a high yield on cost relative to the current dividend yield. At the beginning of 2013, Sherwin-Williams was trading at around $53 per share. This represents a yield on cost of 4.53% compared to a current dividend yield of 1.07%. Sherwin-Williams pays out dividends quarterly in March, June, September, and December. At number 9, we have JP Morgan, ticker symbol JPM. Over the past 10 years, JP Morgan has achieved a compound annual dividend growth rate of 16.09%. Looking back to 2013, investors would have received an annual payout of $1.44 per share, which has now risen to $4 per share. With an approximate cost of $45 per share at the beginning of 2013, this represents a strong 8.89% yield on cost. JP Morgan yields a respectable current dividend of 3.07% and pays out dividends quarterly in January, April, July, and October. Last but not least, at number 10 is Goldman Sachs, ticker symbol GS. With a 10-year compound annual dividend growth rate of 17.34%, the annual dividend has grown from $2.05 per share in 2013 to $9.50 in 2023. Given that the stock was trading at around $135 per share at the beginning of 2013, this represents a solid 7.03% yield on cost. Goldman Sachs provides a current dividend yield of 2.9% and pays out dividends quarterly, March, June, September, and December. So, there you have it. 10 US stocks with over 10% compound annual growth over the past 10 years. Are there any others that would make this list that you feel should be included? Let me know in the comments below. If you like this type of content, make sure to give it a like down below and subscribe to the channel for more personal finance and investing content. Thanks for watching, and until next time, see ya.